Okay, good morning, everybody, and welcome to the Tuesday, December 2nd edition of my daily plan. And do a brief overview of yesterday's price action and kind of where we are and the path ahead, focusing mostly on the very short-term 0 DTE-ish time frame. Okay, so just a quick recap. If we look at the 2-day price action going back to Wednesday, let me just do this so it's kind of easier to see where the day breaks are. Here we are. So we had that gap up. So we kind of stalled out in the 67, 60, 65 or 70 area on Tuesday, beginning that recovery from the week before. And here's where we took out like the 20 DMA, a CTA trigger, etc. So this area is important. That's why I'm even bothering to go back to it. And you'll see when I show you the gamma profile, you see this level still holds some interest. And Options Hans, good morning, my friend. Of all people, good to see you. This guy's pretty sharp, everybody. Options Hans is no joke. I have no problem acknowledging people, or calling people out. And so Wednesday we kind of gapped up quickly. We took the 6,800 area, and pretty much Friday and yesterday we're in that 50-point range. And so I'm just kind of pointing that out. Just a reminder, yesterday the IC whale was camped out at 68.75 up here with 40,000 contracts, and at 68.10 with 40,000 contracts. And let's just isolate it without the overnight session, just as a reminder, because I have a particular affection for the IC whale, because it gives me levels to trade off of. We started out gapping down. He was slightly ITM, but that's a big area. It became sticky. Then we had some numbers at 10 o'clock, I think. I don't care what the numbers were. The market wasn't thrilled about them, but they were just enough to get us over the hump. And once we stayed above that 68.10 level, we kind of drifted up toward the round number 68.50. And then we got pushed down. Now, the interesting thing that happened, well, to me, was interesting. The IC whale started buying back a lot of his short call spreads at one point during the day, and then the puts at another point during the day, which kind of opened the door up for some of this crazy movement. Toward the end of the day, it looked like he was going to get harpooned, but we closed at 68.12. So the whole pod was saved. The pod all operates semi-independently. It's a trading service, so people can do what they want. And there's a small hedge fund attached to it. So anyway, so the IC whale is gone, Free Willy, and we'll see him in a couple of days or weeks, whatever. So let's get to the church of what's happening now. Okay, so overnight session, where are we? Overnight session, we kind of grinded higher, and we're at the 68.30-ish area. The expected move for today was about 30-ish points when I looked before. Good morning, Danny. Was about 30-ish points when I looked before, which puts the expected move bottom at 6,800, round number, that same level we've been trading off of. And at 30 points, the top puts us at 68.60. And it wouldn't shock me if we stayed within the expected move and maybe within the chop zone, which I kind of define as slightly red on the day, and you'll see why if we kind of get down to 68.10-ish, draw your lines with the magic marker. Maybe we undercut a little bit and has 6,800 to kind of get back into there. I don't even know if that happens, but it's certainly within the expected move. And 68.50, then we have like some stalling features up above 50. If we could break above 60, and you'll see why, then it's kind of a choppy zone up to 68.75, but that I don't think that's happening. On the earnings front, not that I'm a big earnings trader in my old age, but software names yesterday broadly beat, I forget who, and so the Cousins were up, Datadog, et cetera. We have Salesforce reporting on Wednesday. A lot of these are coming from beaten up levels, and so that might just be a bit of a tailwind if people start chasing some of these beat up names. That just kind of lift up some. A lot of these names are in the index, in the S&P 500, and certainly in the QQQ. Salesforce is even in the Dow, so so there's that. Also, we have corporate buybacks starting or picking up, and forget which guru it was, Goldman Sachs or Citadel or Bank of, I don't know which guru, but some guru was saying like $6 billion a day to buy. Take the number with a grain of salt. One desk said 1.4 times usual buyback activity. So just like you or I would do, sounds like the corporate buyback desks are bottom feeding, which kind of makes sense. That's not saying we can't go down. That's saying to me that there's kind of a little bit of an extra floor when we get down somewhere, whoever's in charge of their buybacks, programs, whatever. So maybe mark local lows mentally or even on your charts on some of the big names and saying, what, I wonder if they're coming in to support the stock there. Not that it's a grand plot to support the stock, but that's the value area, let's call it. Okay. So I'm trying to think of what else is in the hopper. Of course, the 20 DMA, which is at 68.50-ish. Let me look at my chart. 67, 44, 47, but who's counting, is a key level for short-term CTAs. CTAs are commodity trend advisors. They basically trade the trend. We're starting to see, according to them, not me, I'm not starting to see anything. We're starting to see volatility control funds beginning to tip their toe in the water as realized volatility is kind of settling in compared to implied. And when the huge numbers from a few weeks ago roll off the look back period. Remember, these things go by a 20-day look back, different look back periods. And when those 100-point days come off of the look back of the average realized volatility, that'll allow a little bit of extra allocation to some of these funds. So hedge funds in general are neutral to maybe a tad of a bit. Again, that doesn't mean we can't go down. It means that we're probably not going to have a down goes Fraser moment like we had a couple of weeks ago, unless some of these magic lines break. Okay. VIX, yes, we're going to get to VIX. I got something special in store for everybody in VIX. Actually, let me get there now, and then I'll circle back to where I was going to go. I think this is relatively simple. Where is it? Let me find it. Okay. So what do we notice? I'll tell you what I notice. I noticed that VIX, which is 30 days, and just as a reminder, the VIX is measured taking the Friday expirations bracketing 30 days from now. So it's the Friday before 30 days from now, the Friday after 30 days. They do their magic calculation of different strips and they come up with the VIX. Similarly, the VIX 9-day, which is what we're going to talk about in a second, the VIX 9-day does that for the strip of Fridays before and after 9 days from now. Guess where that takes us? This Friday and next Friday, FOMC day, is within that week. And so if we notice the VIX 9-day, 16.54, the VIX, the regular VIX, the 30-day VIX, 16.7, there's usually a 2-3 point difference, 1.5-ish, if we're a little tight, 2 or a little more if we're a little loosey-goosey. But this is almost backwardated, flat, just in the short term, which makes sense. I'm saying all this long-winded stuff to say this. For zero DTE or short-term trader like me, I'm trading zero DTE, I'm trading through Friday, whatever. I also have some longer-term stuff into December for the rally to 67 to 7,000, which we're going to. I said it before, I'm saying it again. Write it down. Doc said it. But for the short-term stuff, I'm going to watch how this. I look for pullbacks or bounces to just try and tweak and time my entries. So that's what I have to say about VIX. The VVIX, the volatility is puking, because if you look at I don't have a chart up. If you look at the term structure, it's finally looking like a normal-ish term structure. For a while, it was kind of flattish and tilted, and volatility was kind of a little bit out of whack. It's kind of looking healthier, for lack of a better word, other than this little kink over here. Okay, let's look at the profile. So that's my answer to the VIX question. Tarot Oracle. I have a buddy of mine that does tarot cards. I used to do them when I was a little hippie. Okay, now let's go to the next thing. All right. And for those of you that are subscribers, I didn't get my note out. It's ready to go. I just have to send it out. That's it. Just have to click a few buttons and you'll have it. So, and here's where I came up with the plan. 68.15, 68.25, double strike, market maker long, support, resistance, sticky, think of it how you want. So if we're in this 15 to 25 zone, kind of stay sticky, see this fly looking thing, 1, 25, 20, 15, tight little fly thing. Or we can look at the 25 to, let's just take it before we talk about flies. If over 25, we got a little ladder up toward right here, 35, and then we start to stall out, kind of where we stalled down the overnight session. So the horizontal lines kind of match where the levels are. Not that that's necessarily causal, but it's nice when we have confluence. And so there's 40 to 50 areas, sticky, positive gamma, small, don't torture the data, small, but enough to kind of matter locally, especially early on. If we could get over 50, which has been a recent ceiling for, a number of days, actually for quite a while before the sell-off even, then we have these two. But again, they're small. These, there's this double strike 55 and 60. So we could sneak above and, retest 60, which happens to be the top of the expected move-ish. And then kind of we stall out here, we get stuck back into here. If here being 68.50 area, if we can somehow get over 68.60, then kind of choppy action towards 75.80, 75 round number. And there's chunky stuff up here at 6,900. And let's go to the below before I keep going. Now, below 68.15, not much there. Don't torture the data. If below 68.15, I got nothing until 6,800, 68, 67.95 round number. And even then, it's not a lot. It's something. It's something. So 6,800 could be a magnet if we go below there. Again, not a shocker. Yesterday's low. And if this should break, then we have this little ladder down. 67.80 would be the target, whether we get there or not, because, but that's kind of where the lines are. And then we kind of stall out at around 66.70, 60, round number, 75. So in this zone would kind of be where we would stop, the 80, 75 to 60 zone. I don't expect that to happen, but you never know. So it's there. And remember, we have this would be below the 20 DMA, which we don't really want to see if we're bullish. If we're short, we do. But if we're okay, quick look at depth view. Then I'm going to hand the mic over reluctantly. I like to talk. Okay, so let's get this updated here. Okay, so here you see that double strike, 68.15, 68.25. You see small numbers, light red, light green, nothing much. And there's that 68.40. That's pretty big. So if this breaks, could get sucked down there, but then of course strong decay sends it back up. Well, we're not here for a gamma lesson. And below 67.20, there's plenty of support. What I wanted to point out, though, is where are we? Oh, it looks like these guys went away up at 6,900. Where are we? Oh, 6,900. Here they are, 6,900. 6,900, 5,000. And then for Friday, 6,900, another 5,000. For OPEX, 6,900. There's action up there at 6,900. There's action up here at 6,950. There's action up here at 7,000. I don't know that we get to 7,000 by December OPEX, but there's action here. So those are potential magnets up. Also, if we stall, they potentially put us down. We have this interesting bullish ladder here on Friday. 68.70 to 6,900. The market, quote unquote, not the market, the market makers are short. Customers are along this whole ladder up here. Along this whole, now this can decay us out. We know that, but this could also suck us up. So just make a mental note of that. I'll put it in my daily plan tomorrow if I remember it. If not, get the transcript of this video on YouTube and you'll have it written down. Okay, now let's get back to over here. Let me see if I could find my, yep, that looks right. Oh, and breath sucked yesterday. We had bad breath, technical term. And now we go with E-mini and take it away, Chewy.
You can share my screen if you want, Doc.
Oh, good. Wow. Yay. Okay, so that's right. We did that yesterday. Add to stage. I got to remove myself. And I think there's a way to have two screens. I'm going to have to see what that's like. That would be fun. Go ahead.
1 second. All right, guys. So I have kind of a lot for us to get into today. A little bit more of an extreme to the downside that I don't think is likely. The blue arrow indicates the open, 9:30. So don't think that's where we go long, just to make it clear. We're currently sitting around 68.44. I put these kind of weak targets here for you in case you do find a reason to go long. These are two areas that I would watch out for, 48 and 52. The range I have for today goes from 865 down to 835. If we can hold the 836 right at open, so where we are now, I do think we make a move up, climb all the way to our ceiling, which is 865.
Climb all the way up to what?
To our ceiling at 865.
65. Okay. So that would be 55-ish SPX, more or less near the round number. Okay.
Yeah. And if we can get there, I think that's a good stall for today. Obviously, there's always catalysts that can break kind of the range of today. If so, I put these other targets at 870, 882. I think those are good places for us to target should we break above the ceiling. I think that's kind of a bigger move than we would expect today. Were you gonna say something?
I didn't say anything.
Oh, okay. If price comes down, I think 36 is where we find a good floor. 32 is another strong floor that I have. So I've kind of marked this as our bounce zone for today. If we break below the floor, then I see us coming down to 826 and then 820. I think this is a good area where we stall. And then down here, I put more of an extreme, but I think this is a little more unlikely.
So are you,
your gamma?
so gun to your head, are you expecting kind of a narrowish to moderate range day, like a 30-point, 25-point range day, kind of keep a green close from yesterday's open, from yesterday's close? Well, what's your kind of back of the envelope?
Back of the envelope, I think we're upside. I'd like to see us target 865 today, so long that we hold this 36 first.
Okay, so that's basically 68.50-ish on SPX, kind of right where the top of that ladder was.
Yep, right around here.
Yeah, okay. And that wouldn't shock me. And I guess I want to show you something again. Let me get to, actually, let's look at this. Actually, I want confirmation for myself and for those of you that are listening. So the price action is telling us 55.60. Yep, that's what I remembered. And we have a double strike at 55.60. So remember, there's like about a 10-point difference. So that's 65.70. And so there is something to possibly drag us up there in the gamma landscape. It's always if then conditional.
Right.
35, 45, 55 looks like a nice fly. If I could get that cheap enough at the open. 35, 45, 50. I might tweak it a little bit, but that looks like a nice fly to the upside. To the downside, I don't want to spend too much money. I'm a cheapskate. I don't know, 68, 20, 10. Not a great looking fly structure here unless you want to get a cheap one down here at, maybe 20, 10, 6,800. If we kind of pull back and retest that area, those are the kind of flies I would look at. And that's it. So question, and I don't know the answer to this. Options, Hans might, he's into a lot of that macro stuff more than I am. The Fed injected liquidity last night. I kind of read that too. And to me, being, just a trader, liquidity is good. Liquidity is good. It lubricates the system, whatever. Second largest since COVID. So that sounds bullish to me. Now, JPM moved their metals desk from New York to Singapore. I think I saw that headline and I didn't even know why it was a headline. Maybe that matters. Maybe that means something that we're going to be friendly with China. I'm not really sure what to take of it, what to make of that, to be honest. Anybody here, options, Hans, or I don't know if, Julie, if you, he needs Tic Tac for the bad breath here. Anybody here either want to type or if you know anything about that macro moving the metals desk or anything, or is that out of your wheelhouse?
I mean, all I know is that the liquidity should, like you said, lubricate the market a little bit, and because we have so much buybacks going on right now, I think that just means easier upside. Doesn't mean that we will have the upside, but it doesn't mean easier upside.
Yeah. Now, just to macro babble a little bit, I know that there's talk again about Japan raising rates all the way up to 1% or something, and that might cause some, a little bit of money to move away from the index. We saw bonds. Hold on, give me 1 second. Let me make sure I get the right one. It looks like this one here. We saw bonds kind of do this yesterday, the 10-year. Yeah, look at this crap too. We saw bonds yield spike above 4%. We saw Bitcoin selling, the precious metals going up. So there's some kind of fear of that whole inflation, sticky, longer term mess. I didn't have the dollar. I had the dollar up here. I don't have it here. I have the shitty, the bad breath Tic Tac ADD line up here that I was looking at, and the ADSPD, the S&P 500 advanced decline line. And look at that. It just kind of at the end of the day, whoosh. VVIX didn't do much. Here's the tick. I use the tick just for timing entry. And here we kind of almost had a tick extreme at the end. So we had a big whoosh at the end, some serious selling for whatever reason. Here's the tick S&P 500. Even, I mean, in the last 15 minutes, we went from 240 buys to almost 400 sells. They're basically dumping everything at the close for whatever reason. Mechanical, VWAP, TWAP, I don't know, whatever it was. So, yeah, there's something, and Bitcoin is no longer the safe hedge, unfortunately. Oh, yeah, another thing that I'm thinking about Bitcoin, and I've mentioned this before in notes, and that is Bitcoin is highly leveraged, and so to whatever extent commodity trend advisors or wealthy individuals or even mom and pop, you and I, and IBIT is going to be affected by Bitcoin going down. The CTA is going to be selling more. Now, most CTAs aren't Bitcoin commodity trend advisors. There's an allocation. So they're cutting down their allocation. They're selling. They have to pull money from the S&P allocation. And that's just causing more of a kerfluffle, technical term. And so I'm saying that to say this. I'm keeping an eye on Bitcoin for a few reasons. And one of them being just as a risk on, risk off, all clear ahead kind of thing. If Bitcoin can finally stop this cascade, it was down like 9% yesterday or something. Biggest day since whenever, since March. And so I just look at IBIT. I don't like looking at Bitcoin itself. Yes, I can ask Bink about the Miles question. That's a good point. My brother Bink is way more into the macro weeds than I am, with rates and foreign exchange and inflation and all that stuff. I'm way more in the gamma options, Greek weeds. He's way more in the macro, big picture stuff, which, like a lot of people look at the big picture stuff, has had him nervous for a long time because the big picture stuff sucks. If you want to believe, if you want to believe PE ratio and cash flow and inflation and valuations and concentration risk and all that, it sucks, and it sucked for almost a decade. So what can I say? Certainly sucked since. I mean, even in Trump 101 before COVID, he was spending. The Republican and Democrats now, not political statement, just an observation. They're both populists. They both spend. They maybe spend different, pushing the liquidity in one direction or another, but that's liquidity. What happens when the music stops, musical chairs? I don't know. So far, the music keeps playing, other than these brief kerfuffles. So, I'm not going to worry about the 2027 inflation picture. I'm going to look at the, do we take out 6,850 or 6,800 today? That's where my head is.
I also think there's a trend with stocks moving up and inflation moving up. So not necessarily the worst thing if you're trading.
Right. And if liquidity is coming in and stocks are moving, there's money to buy. Then there's a whole other thing with stocks moving up, begetting stocks moving up, because a lot of the big boys and girls play with leverage. The more their portfolios are worth, the more they can play with. So there's a natural systematic buy under the markets as we keep going up, and it tends to crescendo into December. Part of the Santa Claus guy has got nothing to do with Santa Claus, although maybe it does. It's got to do with allocations to the end of the year, and then January allocations. And so there's all this money looking for a home, getting reinvested in the quarterlies and in the annuals and the different, retirement funds or whatever. So, it's a bend, don't break unless something happens to make it break. That's how I see it. That's a world according to me. Okay, I'm going to actually get off early for me for a change and get my notes out, and good luck, everybody. I'm expecting a kind of easy day. Really, I'm thinking, we stay within the expected move and maybe even, just kind of fought around between 68.15 and 68.50-ish, kind of mean revert back toward these levels, 68.25, maybe chop up towards 68.50, stall, come back down to 35, retest 25, maybe squiggle below, almost red on the day or tiny red on the day, then get sucked back up and kind of end the day either sucked into this 25 area with a little green on the day, or sucked more into this 50 area with a little greener on the day. 6,800, maybe, I doubt it, but maybe a drop red. That's kind of what I'm expecting for the day. Knowing that it's all path dependent and conditional. Have to keep emphasizing that. Okay, take care, everybody.